This is Jeb Hanwiger from goldstocktrades.com. Today's Friday, March 16th, 2012. I wanted to update my readers on what's occurring in the precious metals markets, the bond market, and the commodity and equity markets this morning, to really give a clear picture of what is happening. This week, we saw a breakdown in the long-term treasuries. In late December, please go to my YouTube channel and check my video, Double Top in Long-Term Treasuries. In late 2011, we warned our readers that we were going to see a decline in the long-term treasury price and a rise in interest rates. And we were also going to see at the same time a very powerful rise in equity prices, a risk-on rally. We have witnessed that. Look here at the S&P 500. It's broken into new highs. Very powerful rally, actually an historic rally. An historic rally from those lows in October 4th, which you should check the YouTube channel where we called a very powerful reversal rally beginning to occur. It broke out into new highs. Dow's above 13,000. And then we had a pullback to support. And the trend remains significantly higher. Here with the long-term treasuries, for many weeks now, we've been saying that there's been this rally back from this risk-off rally to this risk-on rally, and that the long-term treasuries are topping. Please check out that video in late December where we called a double top in long-term treasuries. We're now seeing the interest rates beginning to rise and the fear of inflation beginning to rear its ugly head. Remember in late December we said there may be gut-wrenching inflation in 2012. And that's why we're seeing money moving out of treasuries. We're going to start seeing money continue to move out of currencies, paper currencies, and we've seen a very move into the equity market, a move in a bottoming process for the copper, the industrial metals, and for oil. So we think that there's definitely much more room for the commodities to rally. And of course, I mean, we invest in gold and silver because as a hedge against inflation. So we're beginning to see those inflationary forces beginning, yet the price of gold and silver have not yet reflected that. And we believe that it will. So gold is finding support right here, and we're almost making a reverse head and shoulders here. We have long-term trend support here around the 160 area for GLD. And the $1,600 area, $1,650 area for the gold price here, the $30 area for silver in the high 20s. I think we will hold there. I do not think that we will gonna break through December 2012 lows, although there is a chance that we could test it. Copper, I'm closely following here because it's on the verge of a potential breakout and it's making this handle above the 50-day moving average. So copper price, the industrial metals seem still very strong and outperforming the monetary metals, gold and silver. So it's definitely what I said in late December, that the industrial metals are set to outperform in 2012. We're beginning to witness that. And that's why if you take a look at the uranium price, I mean, if you're looking for a hedge against inflation and an undervalued commodity, take a look at uranium. We're beginning to like nickel and platinum and molybdenum and many of the other commodities that have been overlooked, as we're seeing this rally explode into the equity market and this risk-on rally continuing. We've been hearing that China is buying copper in the beginning of 2012 very significantly, and that's a sign that as the media reports that the economies are slowing down, the reality is the Asian countries are buying industrial metals like crazy. So stay tuned. We will keep you posted. Have a great weekend.